Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Ludin.
Good morning, JC. How are you?
I'm doing fantastic. I just want to thank you for dropping by our little get together a couple weeks ago. It was very nice of you. Appreciate that.
Well, it was fun having you in my hometown the other day. If you give me a little bit more advance warning, I'd like to hang out with your group a bit longer. But that was fun.
It was all. I actually forgot you were down in New Orleans, and then it hit me. I was like, "Oh shit, we got to get Brien to come hang out, talk about gold." You know, man, New Orleans, what a great. I hadn't been to New Orleans since the Super Bowl where the Ravens and the Niners played, and there was a blackout. Remember that Super Bowl? What year was that? 13?
No, that was more recent than that, I believe.
14, maybe?
The blackout was interesting.
Yeah. You know what I really liked about that? You know, because I had a bunch of friends that were also in the Super Bowl, and I wanted to like go have some drinks at halftime, but like you only have so much time. And I wanted to see Beyonce like break it down, right? Because, you know, how could you not? So I didn't really have time to like meet up with some of my friends and have some drinks. So the fact that like whatever it was, 5-10 minutes into the third quarter, we got a second halftime to go hang out with some friends. Like that worked out pretty well. I'm not going to lie. You know, that was kind of cool.
Yeah, it was interesting that panic did not break out in the Superdome when the lights went out.
The guy I was with bugged out. The guy I was with is like one of those nervous Nellies. Dude, as soon as the lights went out, he was racing up the stairs up into the alley, like just gone. No questions, left me by myself.
Really?
He's one of those nervous Nellies. And he's just freaked out. And he's like, "How are you not nervous?" I was like, "What's there to be nervous about? Let's go. My friend Nick is in the section over. Let's go hang out." You know, I guess I'm a little more cool and collected than he was. But New Orleans, great town, Brien, great town. This is not a secret. Everyone knows. So let's move on to precious metals because, guys, if you don't know who Brien Ludin is, I'm telling you right now, there's nobody on the planet who knows more gold investors, more CEOs in the gold mining space, more mining people in general than Brien Ludin. Do I have that right? Is that fair to say? You are the guy?
I would say don't stop now. You're on a roll. Okay. I'm blushing here. I would never say any of that by myself, but you're more than welcome to. I really appreciate it.
No, you brought some great context to the conversation. You know, so what we did in New Orleans, for those of you who are unaware, Spencer, if you want to drop the link in the chat, we'll be in Toronto this coming September. You know, we get together with a group of smart folks, share ideas. It's not so much a conference as it is a round table discussion, right? Brien, you saw that. You thought that was a pretty good format. You like that?
I love that format. It was like the TMZ of trading. The way you're standing up there and orchestrating everything, all the comments back and forth, and some really, really smart people. I really enjoyed that.
You know, I hang out with enough dummies. So if we're going to go out of our way to hang out, you might as well bring in some smart folks, right? You know, if you could throw up, Spencer, if you could throw up slide 2 there, just to give some folks some perspective here. You know, we got gold making new all-time highs. You know, you've got silver, you know, pushing up against new decade highs. You know, looks like that's heading up towards 50 and then some. You know, one of the things for me that I think about, I get asked all the time, do you see how high can gold go? How high can silver prices go? And my response, and I'd love to hear your thoughts on this, my response is that it's less about how high the prices can go up and more about how long they can go up for, right? For me, it's more the duration over the amplitude. Like how long can we be in this, you know, secular bull market, you know, in precious metals? And, you know, I'll take the over, right? I'll take the over. Regardless of what the over-under is, I got the over. So what do you think, Brien?
Yeah, I hope you're right. I really do, because that'll give us a lot more time to make money off of this movement. For me, in particular, off the mining stocks, which are the way I kind of leverage these moves. But yeah, the timing, both in when it's going to happen and how long it's going to happen for, that's always the tough part. If you look at those charts, you can see that gold already really completed its cup and handle formation. Now, year and a half, 2 years ago, we were all excited about that cup and handle formation, talking about how projected to $3,000, $3,300, even $3,500. Well, we're here right now. So then we have to look at where we go from there. And again, how long it's going to take. If you look at silver, it has yet to break out on that cup and handle formation. So it's got a good ways to go, like you say. Once it clears, say 35, it should have a pretty open road to $50 or more, the old time nominal highs. And it can go much higher than that. So it's an exciting time and really uncharted territory for gold.
Can you explain to the folks what you mean by cup and handle formation?
Yeah, it's if you look at silver, you can see it's got that long basing period, that kind of cup, that rounding bottom, and then it trades sideways for a while, forming the handle for the cup, as it were. And then what you do is you take half of that distance, or you take that distance from bottom to the rim of the cup and project that higher, and that's what you should get for the upside potential where it's pointing to. And for gold, again, that was like $3,000, $3,300 range. Silver, it's somewhere over $50 at this point.
When we talk about the duration over amplitude in terms of, these trends historically last for a long time, so to me, that's front and center. Now, let's put that aside and actually talk prices. These things, you had gold prices down in the 200s and it was pushing 2000, right? You had like a 10x return in that cycle. I mean, even if we have a fraction of that this cycle, I mean, we're talking crazy prices. Crazy, like when you think about it in nominal terms, when you put things in perspective, it's really not that crazy. Throwing out numbers like $8,000, $10,000 gold, like that's not far-fetched at all. But people look at you like you're crazy. I kind of like that, Brien. No?
People looked at those kinds of projections for years when people were talking about $10,000 gold. And now it looks not only achievable, but perhaps much more is achievable than that, depending on what happens geopolitically and with the financial system. But the way I look at it for gold, now that we're in uncharted territory and look at the upside potential, I look at the three previous bull markets in gold since 1971, when the dollar and gold that connection was severed. I count three bull markets: the early 70s, the late 70s, and the 2000s. And
I'm interested in how you're dividing those two markets in the early 70s and late 70s, and you're separating them versus having one secular bull. Can you tell me why you look at it differently like that?
Yeah, gold was trading for the official rate about $40 an ounce, and our organization, actually, my mentor Jim Blanchard, lobbied to get gold legalized again for U.S. citizens to own in the early 70s. And he started our newsletter, Gold Newsletter, in 1971 to help in that fight. He was successful in late 1974. And as it became obvious that U.S. investors were going to be able to invest in gold, foreign investors started driving the price up. Those damn French and everybody else were just running into gold, driving the price up, waiting for U.S. investors to come into the market. So they drove it up from about $40 to a little bit over $200. And then once the U.S. investors got in, then they just handed them the bag and dropped. And the price dropped until September of 1976. It bottomed at about $103, then started a recovery and maxed out at $850 in January of 1980. So I divide that because gold took a 50% haircut. I divide that as two separate bull markets, and people tend to look at the 1970s as one consistent bull market, which
I always did.
Yeah, it's very common. But if you look at it more conservatively and you look at it as two separate bull markets, then you come up with three bull markets where gold went up 5.6 times, 7.8 times, and 8.2 times from the low to the peak. And if you do that, then I mark the low in this cycle at about $1,040. So you're looking at $6,000 to $8,000, somewhere in that range, for the top of this cycle. Now, if you do count the 1970s as one long bull market, then you're talking about closer to 25x, and that gives you an even bigger potential number for this.
Silly numbers, just silly.
Silly numbers where people would call you crazy even today with gold at $3,300, $3,400 for using those kinds of numbers. But it remains to be seen. I mean, if fiat currencies in general and the dollar specifically lose more and more credibility with every boom bust cycle, every crisis, every bubble that bursts, every time the Fed comes in and floods the markets with liquidity and new dollars, as more of those cycles come about, and maybe just one more cycle, fiat currencies in general are going to lose credibility. And the only way to really restore that credibility is to attach them to gold, to anchor them to gold. If you do that to back up the money supplies out there, you're talking about a minimum of, say, $10,000 gold to back up M2 by 20%. And you're talking about $60,000, $70,000 gold to back up M2 by 100%. So you can get to crazy numbers through that process.
You know, we were on the phone, you and I, probably, I don't know if it was earlier this year, maybe late last year. And, you know, one area where we very much agreed, and you were, it sounded like a little bit surprised that these words were coming out of my mouth, was the fact that for many years already, gold has already been making new all-time highs above the prior cycle highs in a lot of different currencies, all of them really. So in other words, every single currency in the world had already broken down to new all-time lows when priced in gold, which one could argue is the real money, right? Fiat versus real. And so all of these currencies, all of them, Aussie, CAD, Euro, British pounds, you name it, all of them, all-time lows, priced in gold when looking at fiat relative to real gold. The only holdouts were Swissy and the US dollar. And last year, both Swissy and then shortly thereafter, the US dollar broke down to new all-time lows priced in gold, priced in real money. You know, for me, it was really just all the dominoes had fallen. Those were really the last two. So it seemed to be inevitable for those to break down also. And that's exactly what happened. You know, can you talk a little bit about that and whether it's, you know, a lot of people tell me it's the wrong way to think because the US dollar is the only currency that matters and and the US dollar is the reserve currency. So don't worry about gold price and those other currencies. You want to school these kids, Brien, and tell them how it is?
Yeah, you know, if you look to the gold bull market of the 2000s, that was a dollar only story. It was really the mirror image of what we saw this time. At that point in time, gold was rising in the dollar, but it wasn't rising in all the other currencies. So when you get across the board, including all the currencies and gold and the dollar, it's an important confirmation that something's afoot, something's different. My view is that the global financial system is really the issue, where central banks flood the markets with liquidity, create more currencies with every crisis, which of course they blow up the bubbles pop, then they have to do more in each crisis than they did before because the patient has grown tolerant of the drug, and so they have to do a bigger dose of a rescue effort to get the same effect. So I look at it as a fiat currency issue, not necessarily a dollar issue. You know, I have friends of mine like Peter Schiff and Brent Johnson, who are kind of at different side ends of the spectrum, with Peter saying that the dollar is going to be the first to fall, and it's going to happen this next cycle. And Brent really saying the dollar will be the last to fall, but it will fall eventually. And I think they're both very smart people, but I don't think anybody really knows. I just look at the trends of gold versus all of the fiat currencies, and you have to recognize the fact that they're all depreciating against gold. That's why it's really necessary. I mean, you talk trading, but there's really two reasons to invest in gold. One is investment, or to buy gold. One is investment, the other is insurance. And if you look ahead 3 to 5 years or whatever, and you can recognize that whatever your home currency is, it's going to buy an awful lot less. Its purchasing power is going to depreciate. And you know that gold is going to hold its purchasing power. So whatever of your assets you can park in gold, you're protecting the purchasing power of those funds and insuring against what you know is going to happen. So really, it's a two-pronged thing. There are two reasons to buy gold. Right now, I think both are valid. I think gold's going higher. It's making up for lost time, and it's a great investment as well as insurance.
Brien, I got to tell you, I talked to a lot of people, and if I didn't know any better, you sound a lot like a Bitcoin maxi. A lot of the words coming out of your mouth are very Bitcoin maximalist, expressions and comments. You want to throw up that chart there, Spencer, please? Talk to me. What's the difference?
Well, the difference, at bottom, the difference is 4,000 years of history.
Oh, is that all?
What's that?
Is that all?
No. I completely agree with the ideals of Bitcoin. Independence from government, individual sovereignty in terms of money, limited supply, transparency and anonymity. Not sure how both of those work, et cetera. But what's happened in recent years is that instead of pursuing those ideals, Bitcoin has sought to run under the regulatory umbrella of the global financial system. And the reason is because the more people you get to buy Bitcoin, the higher the price goes up. If you're a true Bitcoin maximalist, you don't really care what the price is, because that's your home currency. That is your currency, and you only have to convert it every now and then for expenses or whatever, but you really don't watch the price that much. The vast, vast majority of Bitcoin holders today watch the price, on a moment by moment basis, and are really concerned about making that price go up. So they're looking at it as a trade, as an investment, and not really, pursuing the original ideals of Bitcoin. So at this point, I look at it as a tech stock. I think there's a very good chance that it will end up with a use case in being the currency of the world, or the money of the world. But I don't think anyone really knows at this point.
For me, the big difference here is that gold is a real asset with real market capitalization, with real investors, and Bitcoin is a rounding error, right? And the Bitcoin folks don't like it when I say that. I don't know what it is. Maybe they don't like math. I don't know. But Bitcoin's worth $2 trillion. Gold is worth more than 10 times that, right? So you've got over $22 trillion in value in gold, where real investors can actually participate. Real institutional investors can participate in that market versus Bitcoin. How much liquidity is out there really? How much can these institutions actually participate? So you have one with real market capitalization, which is gold, and then you have Bitcoin, which still is really just a rounding error. Bitcoin can go to zero tomorrow, and it won't matter to anyone who actually matters, right? What do you say about that?
Yeah, I think a
little harsh. Brien is a little harsh.
Well, no, I think a Bitcoin maxi will tell you, well, that's why it has all the potential in the world, because it will be making up that difference.
I don't disagree with that.
Yeah.
I don't disagree.
One of the advantages for gold, and why gold is the perfect money, and part of this can be applied to Bitcoin as well, is the fact that gold is, at least in the physical world, it's the only element, the only commodity that you can multiply its price by 2, 3, 4, 5, even 10 times and not upset any industry in the world. because gold's uses are varied, but it doesn't take much gold to accomplish those uses. So in electronics, you can multiply the price of gold. You won't affect the end price of that unit much at all. In jewelry, they will switch to something else. They'll lower the carat weight. They'll raise prices. That's the only industry that will somewhat be affected, but they've gone through that before and they're already going through it now. So that's why gold's really the perfect money. It is more illiquid than Bitcoin, but that can be an advantage. That liquidity means if somebody's going to steal it, they have to physically steal it. They got to pick it up and move it.
True.
So, many would look at that as a disadvantage. I think there are ways to look at that as an advantage as well. So it has throughout history been the most useless metal known to man ever discovered because it's soft. If you make a spear point out of it, people are going to laugh at you and they're going to steal your spear point because it doesn't do much good. It's a soft metal. It looks great. It doesn't degrade in any way. Every attribute of gold has made it the perfect money throughout human history.
Let's talk about the companies, Brien. The dispersion amongst returns in the metal itself versus the companies that are in the business of that metal. I mean, wow. These things haven't done anything. Spencer, if you could throw up slide 4 here. This is the old school. Correct me if I'm wrong, Brien. I love you. You're a little more old school than I am. This is the old school measurement of gold mining stocks. Is there a better gauge, or is this the one?
No, that is the one. Now you can also look at GDX, which is the one most currently used by traders.
Less data though. This one goes back further.
Yeah, this goes back further. There's also the Gold Bugs Index, which is not a tradable index, but it does track gold mining companies that don't hedge or don't hedge.
The HUI, right?
The HUI, HUI. But this is the one that goes back decades and decades and decades, and you can see those swings. Now, these indices from their bottoms to their peaks will go up, say 4 to 5 times in a gold bull market cycle. And of course, if you're trading that on leverage, you can do much better. If you look at the juniors, the companies that are exploring and or developing projects, they do much better typically in the gold bull market of the 2000s. They would go up 2, 3, 4, 5, some 10 baggers, some 20 baggers.
Yeah.
And we recently had one in Gold Newsletter go up 80 times from when we recommended it to when it finally got bought out. And that was in a bear market. So these companies are, they're not for widows and orphans. They are the hair and fire, much more speculative end of the market. But there are ways to handle that risk. And if you can handle that risk, it's a really fun area to leverage the moves in the metals.
I remember I was super bullish. I used to be a gold bug, Brien, back in the old days. It was easy to be a gold bug in the 2000s. You said something funny in New Orleans. I was like, man, it was cool to be a gold bug in the 2000s. There were a lot of parties. Everybody was having a good time. And Brian's like out in the corner. He's like, I think I threw a few of those parties.
Yeah, I throw one every year, bull or bear market in here in New Orleans or in New Orleans.
Thanks for the invite. Appreciate that invite, Brien.
Yeah, please, everybody come. It is the gathering of, we cover everything. Macroeconomics, we have a great speaker list, incredible speaker list. All of my idols in the industry I bring in for it. But bull and bear markets, we have that big party. And I can tell you that in bear markets, it's pretty tough. But in bull markets, it's a whole lot of fun.
No question. I remember thinking I was so smart in the 2000s because we were long gold and the gold miners and we're making all this money, 40% returns and 70% returns. And I'm like, I am the man. And then I'm talking to Tommy Humphreys out in Vancouver, who I know you know.
Yeah.
And, old pal of mine, him and I had recently met at the time. And he's I'm like bragging about my returns in the gold space. I was like, oh, you're a gold guy. Let me tell you about how great of a gold guy I am. And then he's telling me about these junior miners out in Vancouver up 20x, 30x. And I felt like this big. I went from like feeling like I was the man to I totally did it wrong. What was I thinking? I know nothing, right? I mean, it was really eye-opening to see that if you really want those returns in the bull market, you got to go down the cap scale. But it's hard to do because for every 20, 30, 40 bagger, you know, there's a handful of zeros, right? So, you know, how do you think about that? Do you just buy a basket of the juniors? Is there like some insights that you can give us to how to find which juniors to get involved with? Is it silver, not gold? Like, where's the beta?
Yeah, there's a lot to it. And, you know, we have a report that goes into it on our website that's free and goes into all the details. But in a bear market, you'll have juniors that will lose 50, 60, 80% of their value if you don't, if you stick with them, you know, all the way down. In a bull market, the rising tide lifts all boats. And that's why the 2000s was so much fun, because you would invest in these juniors and, you know, the worst performers just didn't go up. They didn't do anything. Generally speaking, if you got in early, they at least doubled. And then your winners, and you know, everybody can brag about their winners and you know, and talk about their 10, 20, 30 baggers. But what really made that bull market special was that your losers didn't drop in value. In a lot of those losers, your worst performers, went up 100%. So that is tremendously helpful to your overall gains in a portfolio, just, you know, from statistically. And right now we are in that kind of a market where the juniors are just starting to move. So there's plenty of time. Now, as far as picking the right companies, you have to invest some time, effort, and skull sweat and some money to do it, really. You need to go to the best conferences. You need to subscribe to the 5 or 6 really good newsletters out there, and take some time to research these companies. But the beauty of it is that it's an inefficient market. So if you put that kind of time in, you can find the big winners and avoid the losers. And again, that free report on our website has all of those details, has the best newsletters, not just mine, but the ones that are really good out there that are independent and not paid coverage, the best conferences to go to. If you're not willing to put in that kind of legwork to find the best companies, then you should just buy the indices, buy GDX, GDXJ, maybe try to leverage it and try and time it. But these companies can be life-changing if you get in the right companies early.
You know, we have Brien Ludin here, guys. This is the gold guy. So you're very generous with your time, and we certainly appreciate that. But you know, I'd be remiss if I didn't flip the script and take it to the other side. We're talking junior gold miners, junior silver miners, high beta names, you know, looking for those 10, 20, 30 baggers. But you know, I'm a big believer in market bellwethers, you know, talking about JP Morgan and Goldman Sachs when looking at financials, things like Exxon and Chevron when talking energy, Caterpillar, Honeywell, GE when talking industrials. You know, when we're looking at gold miners, Newmont is, you know, that's the bellwether as far as I'm concerned. I'd love for you to tell me I'm wrong here. But when I see a bellwether like this thing hasn't done anything in 40 years. I mean, this is one of the biggest bases on the planet. If there isn't a bigger base, I mean, this base goes back further than the Nikkei, right? I mean, this is on another level. Can you pick apart my thesis here? Is Newmont not the bellwether? Am I looking at it wrong?
No, I would say Newmont is. There are better producers. Like Nico Eagle is I think the cream of the crop as far as miners, but it's moved an awful lot right now. You know, it's important to note that that's a log chart. So just to get back to the 2020 highs, it's going to double from here. You know, Barrick Gold used to be another one of the bellwethers, but Mark Bristow has been moving more toward copper, or at least adding that to the mix. He was a longtime gold bug, and now he's a copper and gold bug. Even gave up the GOLD trading symbol for some reason.
I was gonna say Barrick is just B now, right?
Yeah.
I kind of like it. I kind of like the single digit. I'm not gonna lie. Is that a sentiment indicator there or what?
I can't wait to see who's going to grab that trading symbol, though, or whenever it becomes available.
Probably an ETF. Let's be serious.
Yeah, you're right. But Barrick still is a big gold producer, and the reason why there was a delayed start in the miners in this bull market is because this bull market was started by central banks. It essentially started in 2022 when Russia invaded Ukraine, and the U.S. and its allies came up all these sanctions, and countries realized how easy it was for the U.S. to really put the screws to them through dollar weaponization, and central banks started buying gold to insulate them from that effect. It really accelerated last year, especially from China. And that really launched the gold bull market, not Western investing, but more central bank sovereign investing and Asian buying. Those buyers don't buy mining stocks. Central banks don't buy mining stocks, and they don't buy silver. That's why those two sectors that have typically leveraged gold really hung back. And now they are really the only way for Western investors to get involved in this new bull market without buying gold, which has already moved so much. So that's where we're seeing the money starting to come in, and the mining stocks are just beginning to respond. It really is the best of all worlds, the best you could hope for. Gold has already soared to new records, is going higher, but the mining stocks and silver are still near longer term lows. So you can get tremendous leverage now, because the hard part's really been done, getting the gold price up. And, it's an extraordinary opportunity in my mind.
Brien, there's a lot of, we'll leave it here, but there's a lot of folks out there who've never seen a gold bull market. They've never seen it. They hear about it, right? It's like this thing that may have happened before they started trading, and they studied the history, but they haven't lived it. They haven't seen it. Any advice you want to give to these kinds of folks, Straza? Any advice that you want to give to these kinds of folks who've never seen this before?
Yeah, it creates different problems and different issues. And this will sound a bit cocky, I guess, but in the 2000s, the big issue, well, actually, this would have been more in the mid-90s. We had a little bit of a bull market, and I paid some awfully high tuition by not taking money off of the table. And what happens in these kinds of bull markets, when even your losers are winners, is that you have tremendous paper gains. And of course, you may sell a stock and get that cash in your brokerage account and think that you've cashed out, but then you hear another little story or something else, and you put that money right back in the market. It really takes discipline. And as traders, you need that kind of discipline. But a lot of investors in this sector get enamored by the romance of the stories. They fall in love with the stories, and they stay too long. They don't take money off the table. And when I say taking money off the table, because the gains can be that great, you need to take it out of the market on occasion, and you need to take some gains out of your brokerage account and put it in something illiquid, whether it's real estate, whether it's gold, whatever. Put it in something that's a bit more illiquid, so you don't just throw it right back in the market, and dip a ladle into that flow of capital gains and take some money out here and there. It really is an issue, and I think we're getting to that kind of a market again.
Brien, Ludin, GDX, as we speak, making new 13-year highs, sitting right now, last traded just under 53. Back in 2011, when gold peaked and these things completely fell apart, that was up near 67, so still another 15 points. Check my math. That's about 30% of upside here from the GDX, just to get back to the prior cycle highs, making new decade highs this morning. Is it just a coincidence that we have Brien London on our show as GDX is breaking out to new decade highs? I don't think so. I don't think that's just a coincidence. I think we are making gold magic here together, Brien. We're really doing it, Harry.
That's how smart you are to have me on. You knew it was coming. And you know, it really, in my newsletter, June newsletter just went out, I noted that gold was coiling and the Bollinger Bands were pinching, and it was getting ready for a new rally. Do
you guys hear this technician over here talking about Bollinger Bands and the pinching? And I mean, you guys hear this? I'm you guys paying attention, right? This is the real deal. Yeah, I love it, Brien. Give me more.
It's because this bull market really is unprecedented. It's like none that we've seen before. It hasn't had the typical declines or corrections because central banks have been driving it, and they buy, per geopolitical strategy and not through emotional swings like investors typically do. So every decrease in volatility, every so-called correction in gold during this bull market has been more of a pause in the rally, except for the post-presidential election price drop. Other than that, everyone has just been a mere pause, and you've seen volatility drop as the market kind of built up its energy for a next leg higher. And one of the things I noted last week is that any headline at this point could drive gold much higher very quickly because it was coming to the culmination of one of those pauses. It was coiling and ready to make the next run. Of course, we got those headlines last night with the Ukraine attack into Russia, and I don't like geopolitical drivers for gold, but it did light a spark, and I think has sparked a new rally that's very likely to take it over 3,500 on this run.
I know I keep saying last question, but I have to ask you this. You study cycles and you see gold move first, and then you see copper coming right after that. And then that third bad boy is energy. And we haven't seen that energy move yet, but you saw step one in gold. You saw step two in copper. Is energy going to go? Because it's ripping too this morning.
Yeah, I think, energy is more of a supply issue than demand. Demand's always there and gradually rising with its little interim peaks and valleys, but it's more of a supply issue. And the OPEC announcement really drove energy again, or this time in this latest little surge. But it's also, for copper, it's both supply and demand. Supplies are constrained, takes many years to bring a copper mine on, and demand is surging. For gold, it's more demand than anything at the margins, monetary demand in particular, that drives gold. So each market has its vagaries that need to be watched. But yeah, generally speaking, I think if you really pull back, we're entering an era of commodities and less the financials, which drove the last 15 years or so.
Ladies and gentlemen, Brien London, very creative with his website, goldnewsletter.com. Very creative.
How long did you get that one?
Did there?
When you're in the market and in the business as long as I've been, you get to grab these domains right off the bat. So yeah.
When they invented domains, they called them and then they said, Brien, which one would you like? That's what they said, right? They used a telephone. It was wild, right?
Yeah, we grabbed it.
All right. Anyway, the link to that, as well as Brian's Twitter, are in the description of this video on YouTube. I also put the link in chat as well. Brien, thank you so much for the time.
Appreciate you. Love it.
Lots of fun, guys. Anytime.